What's the secret to getting in early on a startup and turning a small investment into a big win? If you've ever wondered how some investors strike gold with startups, it's all about timing and strategy. In this video, we'll break down how you can identify promising startups, invest early, and potentially see big returns. Whether you're new to investing or just looking for new opportunities, these tips can help you get in on the ground floor of the next big thing. Stick around as we share 7 key strategies for finding and investing in startups that could lead to a major payoff. 1. Identify emerging trends. You ever wonder how some people seem to get in on the ground floor of the next big thing? Well, a lot of that comes down to spotting emerging trends before they blow up. If you want to invest early in startups, it's all about keeping your eyes open for industries that are starting to take off. Right now, fields like artificial intelligence, renewable energy, and biotechnology are growing fast. These are the kinds of sectors that could produce the next wave of successful startups. Staying informed is key. You don't have to be a tech genius, but keeping up with the latest developments in tech and market demands can help you spot opportunities. Whether it's a new breakthrough in AI or an emerging trend in clean energy, the earlier you notice these shifts, the better your chances of finding a startup with huge potential. By paying attention to where the world is headed, you can identify promising startups before they hit the mainstream. It's all about being ahead of the curve and positioning yourself for those early investment opportunities. 2. Leverage networking opportunities. Ever notice how the right connections can make all the difference? When it comes to investing in startups, networking is a huge part of the game. Building a strong network within the startup world can open doors to opportunities you wouldn't otherwise hear about. Whether it's attending industry conferences, joining startup incubators, or getting involved in online forums, these are the places where deals and partnerships happen. By connecting with entrepreneurs, investors, and industry experts, you get access to valuable insights that can help guide your investment decisions. Plus, being part of the startup ecosystem means you can hear about opportunities early, sometimes even before they're made public. It's not just about who you know, it's also about the information you can gather. The more you immerse yourself in the startup community, the better your chances of finding that next great investment. So, if you're serious about getting in on the ground floor of promising startups, start expanding your network and building those relationships. 3. Evaluate the founding team. You know how people say a team can make or break a company. That's especially true for startups. When you're thinking about investing in a startup, one of the first things you should look at is the founding team. These are the people steering the ship, so their experience, skills, and track record matter a lot. A strong, cohesive team is crucial because startups face a lot of challenges. The founders need to have a clear vision of where they're headed and the skills to get there. If they complement each other well, like one's great at tech and the other at business development, it's a good sign they can handle whatever comes their way. The more experience and success the team has in their field, the better your chances of seeing a return on your investment. So before you commit, make sure you believe in the team behind the idea. A great concept is important, but without a capable team, even the best ideas can fall flat. 4. Conduct thorough due diligence. Ever heard the saying, "Don't just take things at face value"? Well, that's exactly what you should keep in mind when investing in startups. It's easy to get excited about a cool idea or a charismatic founder, but you've got to look under the hood before putting your money down. That's where doing your due diligence comes in. It's all about understanding the startup's business model, its market potential, financial health, and the competition. Start by asking how this business plans to make money. Is their business model solid? Then, look at the market. Are they in an industry that's growing, or is it too small to offer big returns? Financial health is another important factor. You want to know if the company is managing its resources well, or if they're burning through cash too fast. Taking the time to understand the risks and opportunities will help you make smarter decisions. It might feel like extra work up front, but it's worth it to avoid any nasty surprises down the road. A little homework now can go a long way toward making a successful investment later. 5. Diversify your investments. You know how they say, don't put all your eggs in one basket. That advice works for investing too, especially with startups. Startups can be risky, so one of the smartest things you can do is diversify. Instead of betting everything on one company, spread your investments across different startups in various industries. This way, if one fails, your whole investment isn't wiped out. By diversifying, you increase your chances of hitting a big winner while minimizing the impact of any losses. Not every startup is going to succeed, but if you invest in a range of companies at different stages of development, you're more likely to see a return on at least a few of them. Think of it like a safety net. One startup might be in tech, another in healthcare, and maybe one in renewable energy. Each has its own risks, but also its own potential rewards. This strategy helps balance things out and gives you a better shot at seeing your investments grow over time. It's all about managing risk while keeping your options open. 6. Utilize investment platforms. Ever wonder how people find early-stage startups to invest in without being part of some exclusive club? These days, it's easier than ever thanks to investment platforms like AngelList, Seed Invest, and Crowdcube. These platforms give regular investors access to a wide range of startups that you might not have heard about otherwise. It's like having a front-row seat to the next big thing, all from your computer. What's great about these platforms is that they don't just throw companies at you. They also provide detailed information and analysis on each one. This helps you make smarter decisions about where to put your money. You can browse startups by industry, stage of development, or even location, and get insights into their business model, market potential, and more. These platforms make early-stage investing more accessible and transparent, which is great if you're looking to get in on the ground floor of a promising startup. Just make sure to do your research, even with all the provided information, and invest wisely. It's a great tool for those wanting to explore the world of startup investments without needing insider connections. 7. Stay patient and informed. You know how people say good things come to those who wait. That's especially true when it comes to investing in startups. Startups don't usually grow overnight, so you'll need to be patient. It can take years for a company to reach the point where it's delivering significant returns. But if you've invested in the right one, the wait can be worth it. While you're waiting, it's important to stay informed. Keep an eye on industry trends, regulatory changes, and how your investments are performing. The startup world moves fast, and being in the know helps you make better decisions along the way. It's also a good idea to keep learning about new markets and opportunities to stay ahead of the curve. Patience and knowledge are key when investing in startups. If you're prepared for the long haul and keep yourself informed, you'll be in a better position to ride out the ups and downs and potentially see big returns over time. That's how you could get started investing in startups and increase your chances of winning big. If you found these tips helpful, make sure to like, subscribe, and hit the notification bell for more insights from the Money Blueprint. Stay tuned for more ways to grow your wealth and make smarter investments.